Goldman came out with a note this week reminding investors about the volatility and how concerned they were about the volatility not even 2 weeks ago, and how quickly that confidence in the market has come back and their concerns about it. Adam, what are your thoughts?
Yeah, it seems like the market confidence is like the weather in New England. If you don't like it, like wait a second. It's amazing that in early August, we had the S&P went down to 3% in one day as part of a larger drawdown. It was the worst day since I think 2022 or something like that, and people were screaming, "There's a recession, batten down the hatches, sell everything," and we're 3 weeks later and we're at new highs. So I think Goldman is very right to say, hey, remember what happened 3 weeks ago. Either you think that was just a random sort of technical sell-off, or there's actually a chance that there are clouds in the horizon. It makes me think about that famous Buffett quote, right? Like, be fearful when everyone else is being greedy, because it feels like there's a lot of greed in the air right now. And don't forget what happened 3 weeks ago. People were in a panic, and all of a sudden everything's fine. That seems unlikely. So yeah, you don't know who's swimming naked till the tide goes out. Not to keep quoting Buffett, but there's something under that water right now, and we just don't know what it is.
Well, and we'll come back to what Buffett is actually doing with his own portfolio right now. Austin, what are your thoughts on the note from Goldman?
I think it's interesting because one of the things that we've seen is kind of a bit of a change in composition. Up until kind of early August, it did seem like there were 5 or 6 names that were really driving the market, or there were 1 or 2 themes that were really driving the market. And then as we've seen, some of the economic data, not necessarily as supportive of, whatever your flavor of Fed tightening or loosening would be. We've seen some rockiness or some instability in economic data, which has led people to reconsider what's going on in the market. And it's actually raising the bottom of the market while the top of the market is kind of staying still. So while the market has recovered, it's recovered in a different way than it was performing in the first half of the year, which I think is something that people should really take notice of, instead of just saying like, hey, the broad S&P is back to where it was before it sold off. There are a lot of names that are still below where they were at that time, and then a lot of names that have performed really well, partially because people are expecting this easing cycle from the Fed to be a tailwind for a new kind of set of companies.